All right, guys, these are very, very crucial days for the Bitcoin and crypto markets right now. So we thought taking DavinciJ15 once again back into our show, into our common show, and we will cover DaVinci's thoughts on Bitcoin possibly rolling over or not. We will also pull up the old MoveBitch trade, and DaVinci will share his very own game plan, his strategy on the marketplace right now. Also, guys, if you remember it correctly, DaVinci has shared his thoughts on the Bitcoin US dollar chart before. He was very bullish. It went up. So now we are curious what his thoughts are on that. We can already tell you either he will see a very huge upside potential or a very huge downside potential. Very, very huge. So if you want to see that, stay here until the end of the episode. And also in the end, we will have a very special guest from the Quantfury trading app, and we will discuss different principles for trading. So make sure you stay here for the whole episode. This is a very crucial one. This is a very important one, guys. So that being said, DaVinciJ15, without any further ado, we want to get into the most important question of today. You can already guess it. DaVinciJ15, how are you doing today, my man?
I'm doing fine, thank you. My leg's healing every day and I'm feeling much better. I can walk further and further every day by day. So I'm really happy about that.
Thank you so much. We are also very, very happy about that. You are living a healthy life right now, no smoking, recovering your leg, doing Bitcoin, doing crypto, Pandora's wallet. It's great to see that. And you look very, very happy and also very recovered. If you remember back just a month or two ago, you looked like in one episode very, very tired. So you look recovered right now. You look very happy, and that cheers us up also. So for everyone watching, make sure you smash up the like button to get DaVinci's leg to a 100%. We want to see at least, like, come on, guys, 1,500, 2,000 likes on that video. So let's get straight into the content, DaVinci. As the first point of today, we want to share your thoughts on the market situation right now, whether Bitcoin will be rolling over or will be not rolling over. And yeah, maybe you can share your points before we go into the MoveBitch trade, and also your thoughts on Ethereum and the very, very high potential for a huge up spike or down spike.
Yes, I hope you guys are looking forward to that Ethereum, because man, was I pretty much excited when I saw that chart.
Stay here, guys, stay here. For Ethereum, that will be a crazy update. So yeah, let's go straight into it.
So let's take a look at the Bitcoin price on a lower time frame, an hourly time frame, and across multiple currencies, because I want to see if Bitcoin wants to roll over. And when I'm looking at the multiple time frames, what I find is like not much to look at, but there is a little bit of what's called divergence in the volume. And what that happens is price is going higher, but volume is going lower. It's not much to sink your teeth on and to go short on, but when you see it across multiple different currencies, right? You're seeing this on every single currency. It's not much to here in the euro, but it's still there. And so we could possibly see a rollover sometime in our future. But, you know, because we've got this on the hourly, I wouldn't expect much of a dip. I would say, yeah, probably down to like the 5,500 level. Probably break the hearts of these longs here who have like stop losses set down here. Maybe we'll break these guys' hearts and then start another run higher. And so we will be discussing later on how high, but let's see here. I want to see if I can find any kind of like short position that you can take from this. And honestly, I do not see one. I would not get in front of this train, or you will get run over, Chris.
So currently you are sitting on your hands, not taking that opportunity for a short position. I mean, the market currently, it's very hard to read, and we can see it for a lot of technical analysts out there. It's a really, really tough situation for TA, isn't it, for Bitcoin?
Yes, right now, I mean, you could go shorter term, right? You know, this, honestly, Chris, you could take a short here, take a long here. I mean, the long trade's probably already gone. If I were to do a fib here, I think it's already gone. Yeah, it is, because it's broken out of these levels here. Yeah, it's gone. But here, let's see if you could have got back in. That'd be interesting. If you could have gotten back in. Let's see here, 50%. I'm gonna do this one and this one. It did not break down below 66. And you want to take this, so I'll move this up here and quickly add 50%, 66, the 25%, right? And then I'm going to reverse it, extend the lines. There we go. So let's see what we could have had here. This is where you would have gotten in, and over here is where you take profits, which is whoa. Oh my goodness, that's interesting. That's very interesting. Well, we'll see why this is interesting in a second, actually, because I'm going to talk about the move bitch trade. But yeah, this would be your take profits, where you get in, right? And this is where your stop loss would be, and this is your take profits.
Yeah.
So it's very interesting. This works out to this number, and we'll talk about that in a very short time. So, but before that, let's talk about our move bitch trade. How, you know what? It was a very difficult trade.
Emotional.
I remember how I said, yeah, I take this trade because it's set up, the market's set up perfectly for it. But man, do you know how much stress I did take this trade? Do you know how much stress I went through on this trade? I was like, oh no, I'm screwed. I'm dying. And then, oh yeah, I got this. And then, no!
And then again, I'm right.
I'm out, man, I'm out. I'm tired of this. And I did get out right about here.
Yes,
and then, of course.
You said that, but still, I mean, you weren't stopped out. You took a significant good profit on that trade, like 8 or 9%. I don't know. So that was still good, even though it went even higher, isn't it? But it was very emotional.
Yeah, it was very emotional, right? This is 11%, 11.553% gain on your risk to reward ratio here. But man, was that a very difficult trade. And the reason why this trade was difficult was not because the probability was good that it was going to go there, because all the things were, everything, the moon was aligned perfectly. It's because this is not part of my trading plan. When you don't have a trading plan, Chris, it makes it difficult for you to believe in that trade and say, hey, you know what? I know I'm going to follow this trade right till the end, whether I lose or win, because what I'm working for is an average winners, a higher average winners. And because this was not part of my trading plan, it made it difficult to make this trade and stay into this trade properly. I have several trading plans. One's called the Davo, and the other one's called the Bot, which I've stolen from Brian Beamish. And yeah, those trades are easier to make because you just follow them, and you never ever deviate from those trades because they have a solid results every single time.
Okay, so we already have the first lection of today. Always have a trading plan. This is very important for your own trading psychology, because if you have a trading plan, if you know what you have to stick to, you can stick to your trade and don't get any weak hands when something deviates from your expectations. You will just stick to it because it is within your planning.
Exactly. And that's the most important thing when you're trading, is to have a plan and follow it. Even if the plan sucks, what you have to do is, you have to, even if the plan sucks, you have to follow it, 20 trades, and then see what happens. And then after that, you adjust your trade, you adjust your plan. After 20 trades, you see, okay, did I get more than 50% right?
Yeah.
Yes or no?
Yes.
Right, and then adjust your plan.
So what we can do right now is we can take your thoughts with your trading plan and ask you what is basically your game plan, your setup for the market situation right now.
Yeah, well, looking for trades, of course, because the market is actually going in a higher direction, because here you can see 13 EMA on the 4-hour that it's staying above the 13 EMA right here, this yellow line here. I don't know if you guys can see that. I'm going to try to just auto scale that, and there you go. It's right about here. You can see the 13 EMA yellow line. The price is staying above it. Every time it breaks down, it comes back, shooting back up. breaks down, shooting back up. So it's staying nicely above the 13 EMA. So you're always looking for a long position to get into.
It also bounced from it, like a few hours ago. It bounced from it. I can see that with that huge crash after it approached the 6,000 level.
Exactly. So you're looking for long positions in this market, not shorts. You do not want to get in front of this train. You will get run over, so do not do that.
So the trend is your friend until the end?
Yes, exactly. Exactly. All right, so let's see where I still want if the market were to go roll over here, because anything can happen. Anything can happen, Chris. As we were looking for shorts positions here, the only thing we could look for is the volume divergence, and that was the only thing I could find. Oh, wait a second here. Did I just see a Davo short come in here? Oh my God.
No.
Yeah. No way. No way.
This is not planned, guys. This is not planned. So let us know what is that all about, Da Vinci? What is that all about right now?
No way. Davo short is just coming in on the 4 hour. We've got 2 hours left to find out if it will work, if it will go through.
So that will be after that will be before the upload, but after the recording, just for the viewership to know that this is slightly pre-recorded.
Exactly. So let's see here. This is there is a clear M pattern in the volume on the 4 hour. Wow, that would be a huge risk though. What we're talking about here with the Davo here is the Davo short coming in. Let's see here. You'd have to go, the M starts here on this candle down here. We're going up, down, up, and then we need to wait until this thing to close. Once this closes, this candle closes. If this candle, no, wait a minute, it's finished on this candle, this red candle. Okay, so it closed right here, so we have to go for a short. So let me delete here. Yeah, this is already actually completed, so you don't have to wait the 4 hours to see. It's already completed. Short. Where is it? There we go. Short position. So it starts here. You're going to risk to here, and it's only a 2-to-1 Davo because it didn't break this line. Let's see here. It's a 2-to-1. Yes, a 2-to-1 Davo. So that means 2-to-1 Davos actually are very interesting. What happens is you can double dip a 2-to-1 Davo, meaning that the price will come down here, you hit your target, and then come back and then hit your stop. So you can actually do a short here, a long here, short here first, and then a long up here, and then the profit take up here.
Let's read the prices also, because some people cannot see it when they are looking watching from a mobile device. So.
Oh, sure. So the price for your stop to get stopped out is at almost $6,000. So it's $5,973 is your stop loss. Your entry price is $5,861. Your profit taking is $5,633.
Okay.
So basically, you would have to take profit exactly at that when you're doing a 2-to-1 Davo. It's clear that this is a Davo. Let's just make sure. Yeah, it is. Yeah, it is. It's 100% a Davo, and you should. If I was a day trader, I would take this trade.
It's a very short-term and risky trade for everyone watching, obviously, guys. And I think when Da Vinci, when we upload the video in when we will upload it, will that already be over, or is there still a little bit of more time?
By the time you upload this video, it'll be over.
Okay.
So we'd know what happened. And you know what? Honestly, as a technical trader, remember what I said, right? What are we supposed to be looking for? The trend is your friend until the end. If you take this Davo, even though it's clear that it's a clear Davo, the trend is up.
Yes.
So you're going to be really pissing in the wind here.
Yes, and spitting, and spitting, and spitting. So, guys, no matter whether this works out or not, it was still a very, very valuable lesson to check out how this level might work out, and you can basically apply that to a future setup whenever that shows up again. But yeah, as you say, the probability usually would be very good for taking that trade, but with that trend right now, you are basically acting against the wind. Let me say acting, okay?
Exactly.
Yeah.
Exactly.
So, sorry.
So yeah, I mean, I would say forget the short, even though you know what, the data was clear. It says that you should take this trade, and you know what, if I was day trading, I would take this trade, even though it's going against the market. Because it's a trade. A trader's got to trade.
Yeah.
And I wouldn't find it's not. Besides, you don't lose a large amounts of money anyways. You're not risking like massive amounts of money with this particular trade. Now, as for where it could go, this market, take a look at this price. This price is at we're doing an AB equals CD price, and it lands up around 6,230. Now, what was that other price? Was that, oh, it wasn't that 6,230, it was a 6,469. I thought it was the same, but look, the golden ratio, is that the golden ratio? No, it's not. But yeah, this trade finished, this upward trade, if you were to take this one, is finishing off at 64.69, and this trade is finishing where are we? Where is it? Oh my gosh, did I lose it? There it is, right here.
Yeah, 62.
Right here. So this trade is finishing off at 62.30. So that doesn't really line up. I was hoping it lined up, because then it would have been like, oh my God, guys, the market has lined up nicely to take a trade, right? Higher, but no, it didn't. But if markets were to roll over right now, it would be perfect, because you know what? And let's see, where was I? Right here. Mm-hmm. If markets were to roll over, I think it was right here on this trade, on this chart. I could have swore it was right here. Roll over, where is it? No, it's not on this chart. Did I move it?
What are you searching for right now?
Okay, right here. Yeah, I'm gonna delete all the rest of the stuff here because this chart's getting way too busy. Delete. Right, I'm going to delete this.
But let me, while you are deleting it, there was this one level 6,262, and this is actually also crucial from another viewpoint. In one of our last episodes without DaVinci, we covered a few different indicators pointing towards a specific direction for the market, and a very crucial price level was 6,300, which is 2 times the yearly low now, which was it was in December, 3,150, and 6,300 is 2 times the low in this bear market. And going into the history, 2 times the low was always a very crucial point. Before it was like in 2015, 165, and once Bitcoin surpassed 2 times the yearly low, the low of the bear market, it was really off to the races. So 6,300 will be very crucial, and this price level right there, 6,262, is not 6,300. So basically when we approach that level and we roll over afterwards, we would have not hit yet that very crucial price level. Just wanted to throw that in while you were deleting some other lines there.
Yeah, no problem. Now, here's what's interesting about this current top here that we're at right now, at this moment. It's unfortunate that the market is looking very bullish, and it looks like it wants to go higher, because if it were to roll over at this point, everything else lines up. Take a look. All these old points that I have set up from way back when line up with the 38 point. This lines up with the 38.2. This lines up with the 61.8. Almost exactly.
Yeah.
So
exactly.
Basically, right, when the markets do that, generally they're going to hit those targets, right? They're going to hit these targets for sure. But the market has to roll over for this to come to fruition. If it goes higher, honestly, if it goes up to here, it makes my whole hypothesis of Bitcoin coming down to 4,200 almost null.
Yes.
So that's a little bit nerve-wracking for me. I obviously don't want to buy Bitcoins up here. I want to buy them down here. So, so yeah, that's where we're at, and that's what the market's saying, and there's nothing I can do about that.
Yes, yes. But I think what's really mind-blowing right here, let's say Bitcoin is not going higher, it will roll over. It's really crazy to see how those lines are exactly matching up with the Fibonacci levels 38.2 and 61.8. I mean, it's like nearly exactly matching the lines you have laid down beforehand. And now, once we approach that current price level as we have it right now, as the upper level for the Fibonacci calculation, it's crazy to see that really those lines are matching nearly perfectly. So now we have two different scenarios, Bitcoin rolling over right now and then with a very high probability approaching the 38.2 and also the 61.8. But let's say that does not happen. What do you think? Bitcoin will approach 6,250? So is it like...
Yeah, it looks like it. I mean, if you're looking at this as what's going to, where these guys see, you know what, the industry, they're going to go take longs on this thing. The industry they're taking longs, because if we go to even to the daily, right, we're above the 13 EMA, right, on the weekly, of course, as well, like way ahead of the 13 EMA. So obviously industry is looking for long positions in this market on a daily basis, on a daily day trade basis. So this has got the wind at its back. This Bitcoin has its wind at its back, and then there's no way you can get in front of this with a short unless you want to lose money.
Yes, yes. So let's just pretend someone comes to your house, and I'm just pretending, and someone is pointing a gun to you and saying, okay, tell me right now, what is your game plan? What do you think is more probable? Because I can figure it's very hard to say right now, but a lot of people are maybe asking themselves, is it more probable to go to the upside, or is it more probable to roll over and approach those two Fibonacci levels you have mentioned before?
Right now, it's more probable to the upside. Unfortunately, the only downside, negativity is the volume, and that's just not enough to push Bitcoin lower. So yeah, we got more room to go, and hopefully, wait a second here. I just saw something interesting here.
Again? He's doing it again to us, guys. He's doing it again.
Oh man, I know. Sorry.
But I can remember we had some of these moments, and those were the moments which really played out very well in the end.
Exactly. Oh, wait a second. Well, we have unconfirmed divergence down here with all these, but they're just unconfirmed, so they don't count, really. They're unconfirmed. They have divergence here, right, and they really don't count until it's confirmed. So, yeah, we've got unconfirmed divergence here. We have unconfirmed divergence here, but again, it doesn't count until they get confirmed, and so we have more upside basically.
Okay.
And you can get more of this.
Okay, but before we go to Ethereum, where you definitely have a specific game plan right now and a specific high probability prediction with a huge potential to the upside or the downside, guys, stay tuned. Just for a few closing words, what is actually your game plan right now? Is it like sitting on your hands, or do you have something which has a higher probability for Bitcoin before we go into Ethereum, which will be very exciting, guys?
Well, since I'm not a day trader, and even if I was, whether I'm a day trader or a swing trader at this point, I am definitely sitting on my hands and I'm waiting for the next trade to make, because you have to. Well, as a trader, what you're doing is you're looking for the market to set up and give you a whole big pile of money and setting it aside there and looking for it. And all you have to do is go there and pick it up. And when the market does that, right, you go and make the trade.
Yes.
And that's where your best trades are. You can make these small scalp trades, like, for example, the Davil that I mentioned. It's a scalp trade, to be honest. You can take it if you want to, but you have to understand the consequences, right? And it's not a huge consequence if you don't bet a lot of money, right?
Yeah. Exactly. But let me point something out, Da Vinci. Before, I think it was one of the last episodes, we asked you for your opinion on Ethereum. Then we checked out the Bitcoin Ethereum chart, so the Ethereum Bitcoin pairing. You wasn't all too bullish on that, but now it's getting interesting. We were also checking out, and that was also just like in between, we checked out the Ethereum US dollar chart, and then you were really, really bullish on that. And as we see it right now, Ethereum Bitcoin haven't performed all too well. I think there is a slight profit, but for Ethereum US dollar, there was a huge profit. And usually people say, okay, yeah, Bitcoin went up, so Ethereum also went up. That's usually not always the case, especially not in a bear market. Ethereum is sometimes really going down if Bitcoin is going up. So in that case, Ethereum was going with Bitcoin, even surpassing the Bitcoin US dollar ratio. So Ethereum is now very profitable. What is your view on Ethereum right now? Do you think this is already the end for Ethereum? Will it go down from here, or is there still upside potential?
Well, let's just take a look at the charts, Chris. Here we can see that, oh my God, I mean, the little old lady, the little old lady was a dollar bug.
Licking her chops?
Did anything and wanted to sell half on a double. This is like heaven. Oh my God. Look at this thing. It has making W's everywhere. Like, come on, people. This is like shouting. Like, yeah, we're going to the moon. We're going to the moon. We're going to the moon.
So she is licking. is she licking her chops, Da Vinci?
Yes, she is licking her chops. She's got like a free, like, easy money here. It's going to easily double because here, when we take a look at this Fibonacci level.
Easily double? Wow, guys, it's good that I'm taking a seat because. If I was standing, I would have fallen down to the floor, man. Easily double from here.
Yeah, exactly. Because take a look at where we are, right? At the 50% level is where the only resistance is. And so this thing could take off all the way to the 50% level, which is $450. Right? This 38.2 is no resistance. Forget it. You can pretty much forget it. Right? We have a 50% level right here at $452. I mean, come on, people. This is like, I mean, this is no guarantees here, but with if you take some fundamental analysis, maybe you can find out whether or not it's going there.
Yeah, thanks for mentioning that, because now, and guys, we can tell you we didn't know about his prediction for Ethereum because he really made that up in the end and he didn't want to tell us, to make us surprised. But this really, the fundamentals at the moment really match up with what you say. And obviously, guys, don't quote us on that. If we are bullish on Ethereum, for example, it does not mean it has to go up for 100%. But what you say right now, you are very bullish on Ethereum, seeing a potential double at least, maybe even higher to 450 levels. And on the fundamental point of view, on the news events, there was recently a very, very exciting news on Ethereum because Fidelity or CFTC, don't remember it 100%, they want to deploy futures on Ethereum. And now let's go to the Wayback Machine. Let's remember ourselves on the futures of Bitcoin. They were announced in a bull market, so that's obviously a different scenario. But afterwards, Bitcoin skyrocketed also due to the futures news. And once the futures were deployed, the big guys came and they took all the money from the small guys. But previously to the deployment of the futures contracts for Bitcoin, Bitcoin had a huge rally. So that really fits the scenario on the TA point of view right now, because there was this news, Ethereum had this 9% spike or so, and if the history does not repeat, but if it rhymes, during the short and mid-term, Ethereum might rise, and then once the futures contracts get deployed, the big guys might come and short the money out of the smaller investors. So it's no 100% certainty, especially now, since we know how crypto can react to futures contracts, and it might get priced in. But if it is not getting priced in, and if the people are getting greedy and jump on the hype train of Ethereum, that might be a very probable scenario from the fundamental analysis point of view also. So what's your thoughts on that, DaVinci?
Yeah, I mean, if we can get a date for when I think it's the CME futures contracts come out, that would be perfect, because that would be the date, right, that you basically sell the fact, right?
Yeah, maybe a day before.
Sell the fact, right?
Yeah.
because that's how you deal with fundamental analysis. Is that's usually that's the end of the move, is when the news when the news actually comes out and the fact comes out. So that's a good point. I see the Ethereum might be rising into that news event, basically.
Yeah. It's very interesting what you mentioned, also selling it before the fact. And let us draw a conclusion to the previous bull market, or after the bull market, in the beginning of the bear market. Always when coins were listed on Binance, there was the announcement, the price went like crazy, and at the listing it dumped. But as the time passed and more coins were listed, the dumping was 1 day before the listing, then it was 2 days before the listing, then 3 days before the listing, and the people knew they have to sell in advance to the fact. And the more people knew it, the further it was previously to the fact. So maybe now we have to sell, and it's no financial advice, guys, we have to sell previous to the fact, maybe a day before, maybe 5 days before, who knows. But since the news will be priced in, and since the people know they have to sell before the fact, maybe this time we shouldn't sell immediately at the day of the futures deployment. Maybe we have to do it before, because the people will know about that.
Yeah, but Chris, this is a high volume asset. That's not necessary, because more people will be, the majority will be coming in on this asset, and that don't understand how markets work, and they will be the ones who get burned once the CME lists the Ethereum.
Yeah, let's see how it goes. It will be very interesting. Also on Binance, sometimes you see like volumes of 200 million a day for a fourth tier, or for a third tier coin. But let's see how it goes. This is actually a very interesting thing. Your TA point of view and also the fundamental point of view are really going hand in hand right here. So thanks for sharing your thoughts on that also. And I don't know, do you have any last words, maybe also for Pandora's Wallet, before we go into our very special part with our very special guest from Quantfury, where we will also be discussing trading principles, some of your questions, DaVinci, some of your thoughts. Maybe before we go into that, do you have any things to share about Pandora's Wallet also?
Yeah, I was trying to get the next version out yesterday, and found a lot of bugs. I found some bugs in it. I need to get cleared up, and so hopefully by the end of the day I will have that released available for our clients to start downloading and using, because it's a lot faster, a lot improvements on the exchanges and so forth. So there's a lot of cool improvements coming in the next version.
All right, so link is given down in the description down below. You have a free trial. There's actually no excuse. If you are a fan of DaVinci, free trial, guys. Free is not even cheap. I'm always saying that, but there is the link given down in the description down below. And now, guys, we are going into a special part of the video. We have a special guest, the CEO and the founder of the Quantfury app, and we will not only talk about the app, we will talk about trading principles, we will talk about a few very interesting things, also under the hood information from the exchange point of view, from the trading point of view. So make sure you stay here. We actually also want to openly and transparently disclose that Quantfury is supporting and sponsoring the channel. They are helping us out very much. So thank you so much for doing that, Quantfury. But we have to mention that they were expressing their need that we have to be as positive or negative as we want. And you will see that we have positive things, negative things, yeah, very critical questions and also positive questions in that video. So make sure you stay here. It will be very interesting and entertaining, guys. Yeah, without any further ado, guys, we want to thank you for watching the first part, and now have fun with the second part, guys, and see you on the other side. Bye-bye. All right, guys, so now, as promised, we have the special part of the video. We have a special guest, Gregory Kim, actually, and he is the CEO and founder of the Quantfury app. What we will be doing, basically, in that special part of the video, we will not only talk about the app of them, we will also talk about very important principles for trading. We will hear DaVinci's thoughts on it, we will hear Gregory Kim's thoughts on it, and also our own personal thoughts on it. So thank you so much for taking your time, Gregory. You are the CEO and co-founder, so you are the perfect person to talk about that. Basically, our most important question to you today is, how are you feeling today, Gregory?
Great to be here, guys. Thank you for inviting, and watched your shows, watched your videos, and finally good to be here.
Big pleasure, big pleasure. Thank you so much for watching the show. We hope you're liking the videos also. So let's get straight into the content today. Sure. First of all, DaVinci and us, we have been using the app, and now we have a few questions to you, not only about the app, but also about a few principles for trading. Because when we are talking about the app, it is about trading. You can leverage trade on that. So we have a few different questions about that. Maybe we can start with you telling us a little bit more about Quantfury, what the app is about, and what you are basically doing to serve the traders and investors who are using your app already.
Sure. I mean, Quantfury in a nutshell is it was created to solve the biggest problem that the retail traders face today. So Quantfury has no fees, no commissions whatsoever. The prices are never manipulated. They're coming directly from the global and crypto exchanges. And when our withdrawals and our deposits are instant, and users have the best experience in the trading, in the palm of in the hands through their mobile apps. Obviously, we don't serve Canadian and American users, but outside that, we already have 47 plus countries, users coming from those countries. So, yeah, we are here to serve them.
All besides US and Canadian, basically. So it's cool that you have this widespread distribution already. What we have also seen is you are on the Android app and also on the iOS app store, and it's very hard to get there as a crypto and trading platform. So congrats on that, basically.
Thank you.
Talking about your app, we, for our part, we have been using it, and yeah, I have to say it's very handy to use. It's easy to use. And I was surprised also that I downloaded it, and after like 20-30 minutes, I got the confirmation for the Bitcoin transaction, and I was able to start already with a 20x leverage. So that was actually crazy to see. And it's a good point, actually. It's very easy. It serves the mainstream. I have one concern. You don't have the advanced trading techniques being laid down. So you don't have the Japanese candlesticks in all different variations. You cannot do the Fibonacci retracement. So would you basically suggest the people using the app to make the charting on Coinify, for example, and then doing the easy to use leverage trading on the Quantfury app? Is that your approach?
Right, absolutely. Quantfury, I think you made a very good point. They can use TradingView, for example, as a charting tool, but for the execution, I believe Quantfury is the best out there. And on top of that, it's not only coming from the real exchange prices in crypto and stocks and ETFs and so on, but also you don't pay any fees. The fees you shouldn't be paying in the first place. And I want to stress that point. So yes, we are the best execution platform. The trading doesn't have to be complicated. Trading has to be simple, intuitive, and easy to understand, and cannot be manipulated. And that's our stance.
What you mentioned regarding the zero fees, I want to pick that up a point later on, because this is really, really crucial, and we have some questions on that. First of all, Davinci, is there anything you want to mention also, maybe?
Yes, I also tried out the app, and I deposited $500 worth of crypto onto the app and just started trading. I actually went short.
Are you losing or making money?
I got liquidated.
Awesome.
But that's all right. I wanted to try out the application, and I was just having fun with it. And I was pretty impressed. I was like, wow, niche, pretty good. Well done. The only concern, right, is that with our audience wanting to trade crypto, wanting to trade Bitcoins on what I'm saying, I don't want them to, they can easily run out, download your app, and within a few minutes, start trading 20x and lose their money if they don't know what they're doing. And that's my only concern with the application. And how do you feel about the 20x leverage? Do you think that it should be a little bit lower, or why did you settle on that particular?
So that's actually a very good point. We do give up to 20x leverage, but it's up to our users to take up to 20x. They can take 1x, 2x, and 5x, and so on. So trading, again, is all about managing the risk, managing your expectation, managing your emotions. And I've been with the big banks as an institutional trader, and me trading on a prop trading desk, and our users trading with the Quantfury app, I don't think there's much difference. But it's all about managing the risk and managing your leverage as well. But having said that, our retail traders will lose the least. The statistics out there done by many universities out there is pretty clear that 90% of the retail traders will lose. But with Quantfury, they lose the least because there's no fees and commissions. We don't charge the leverage fees, and if you take the leverage, we don't charge you for that the rolls for the next days and so on. So come and trade with us.
Yeah, that was the first shout out. That was okay. You have a good point. When you really have no fees, no commissions, then your expected return obviously goes up. But still, you have a very big danger involved. So everyone who is trying to use the app, feel free to do so, but be very sure about the risk involved in leverage trading, guys, because you should definitely. The first principle really applies here. Invest only or speculate only with what you are willing to lose, because in leverage trading, obviously, the upside is huge and the downside is also huge. So always keep that in mind, guys. We just wanted to mention that. Now we want to come to something else. We want to come a little bit more to your back end, because as we know it from a lot of brokers out there, they have a big lack in price efficiency and transparency. So how do you make sure that you are transparent, that you have price efficiency, and that you are not manipulating and are basically transparent for your customers, also for the pricing and so on?
So let me backstep a little bit here. For the listeners, I have to say there's a big secret in the industry. It's called the B-book brokerages. Let it be plus 500 and the Wanda and etc. What they do is that they show the prices that are their own prices. We don't know where the sources are from. They take all these fees and commissions on the trading. But guess what? When you trade on that platform, they don't actually go to the exchange and buy and sell. They actually take the other side of the position as a market maker. With Quantfury, we are also acting as market maker. We will always give the liquidity in our buy and sell. But our prices are from the actual exchange prices. We don't manipulate those prices. We don't take markups to make it wider. And we don't adjust the prices according to some exchange out there, have these average prices from 3 different exchanges. And we don't know the compositions, and the composition may change during different time of the day. But our prices are directly from Bitfinex in the case of crypto. So the transparency is key. And the transparency is key to win the hearts and minds of our users globally.
Davinci, do you have anything to add on that, maybe on the point of the transparency, or Bitfinex, or?
I noticed that you guys transfer when I set it up and I started to transfer money. I didn't have to transfer through the banking system, which was, oh my God, huge.
We are not the biggest fans of the banking system. Yeah.
Exactly. I was able to send Bitcoins, and after a few confirmations, I noticed that it switched over to cash in my account. Still remain cash in your system. Do you guys keep just the cash there, or how does that work exactly?
All right. So let's backtrack a little bit again. First of all, when you deposit a Bitcoin into our account or into your Quantfury account, you will get a trading power that is in fiat funds, in the fiat amount. And in the account balance, you see your P&L according to your trading positions and trading results in the Bitcoin, in the real time. So if the Bitcoin price goes up and you do nothing in the trading, your account balance will obviously go up and show in the fiat amount and also the Bitcoin amount as well. And second question is that obviously we have a very good merchant solution for coin payments. It's number one crypto merchant out there backed by the custodian. It's with a proven track records of Shopify and all the other merchants as well. So our crypto is pretty much secure. Our user crypto is pretty much secure with the coin payments wallets.
Yeah. Okay. Cool. I have another follow-up question. How is Bitfinex involved in this process? Do they have the Bitcoins that I've transferred to you, and are they holding my Bitcoins? How does that work?
Yeah, that's a good question, especially with the news with the Bitfinex. So first of all, Bitfinex still is one of the top exchanges, and meaning that they do have plenty of liquidity out there. And good liquidity means good pricing. I mean, in Ethereum, you're seeing 1 cent spread, and in Bitcoin, you see 10 cent spreads. We are taking prices from Bitfinex, and that's it. We don't, have a liquidity issue with Bitfinex, or we don't trade with Bitfinex, but our users are seeing the very tight pricing from Bitfinex. For your, for the other question, say you send the money to us, or crypto to us, we don't go to Bitfinex. We actually, again, use the coin payments for the solution, for the wallet solutions, which is completely secure.
Awesome.
Okay. So one last follow-up question on that point is actually when things get even more serious. I know you're not sending the money there, but when things are getting more serious, do you have any plans to maybe switch or provide an alternative as an exchange?
Yeah, that's actually a good question. We do think that prices of the assets should reflect the real market prices and the real prices. So we are working with another exchange for Binance for our users to, it's pretty well known, I guess.
We know that,
So our users can choose which cryptocurrency they want to get, Bitfinex or Binance. And it will give us more, usability.
Yeah. No, that's fine. That's fine. Also, even though there wouldn't be the biggest danger involved for marketing purposes, it would be good to have an alternative when things really go south with Bitfinex. And who knows if it will, but it's good to hear that. Now, I want to come to the most crucial question, because you mentioned that in the beginning also, this zero fees. And to be honest, it sounds a little bit crazy to me. So you said you have no zero fees, no commissions, no maker-taker fees. And when you're taking the prices from Bitfinex, is it that you have to circumvent the Bitfinex maker-taker fees and the commissions and so on? Or what's actually your solution? Can you maybe give us an explanation how that actually works? Because usually when you hear zero fees, it sounds a little bit unimaginable. Yeah.
I understand. It is maybe a little bit good to be true, but no. To your second part of the question, no, we don't take the maker-taker fees when we show the prices from Bitfinex. The Bitfinex prices are what you see, and in their own exchange, and it's transparent. I want to actually you raise that point in a way that these people brokerages that charge all these fees, we are going to make a lot less money than those brokerages out there. And yet, we want to have what is fair. Why the users are trading on these other exchanges and the market or liquidity providers or the market makers do not actually take your order to the exchange and transact? Why do they actually charge all these fees? That's not fair. So what we are doing is actually what is really fair for our retail traders and retail investors. And it doesn't necessarily mean that we are making money, not making money. We are because of the spread. But we are making a lot less. But we are doing what is fair, and I think that's most important. And also the transparency is fair, because you want to compare the Tesla stock prices, or you just go to Nasdaq exchange and see the bid and offer, bid and ask prices, and come to Quantfury, and it's going to be exactly the same.
Exactly the same. Okay. So you are actually really replicating the order book from the Nasdaq in that point of time.
Yes, we are showing what we call the level 1 data, which is buy prices and sell prices.
Okay.
And we're showing it to our app, to our users.
You quickly mentioned you make money on the spread. Can you explain for our users, basically detail exactly how do you make money on the spread?
Sure. So spread essentially is difference between buy and sell prices. Because of this buy and sell prices, well, okay, let's say you enter a position, you say buy Bitcoin. In a perfect normal world, in the normal distribution world, it's a coin flop, whether you make money or you lose money. So 50-50, but because of the spread, it doesn't become really 50-50. It becomes more like, say, 49 against 51. And that difference is the spread. So say Bitcoin price now is at 5,000 to sell, and to buy is 5,010. So the $10 is the spread that you will always have to cross. Because once you enter a trade, you have to get out.
Yes.
And you will have to cross the spread. And that's how we monetize our volume and our users, our user trading.
Okay. Sorry, DaVinci, I cut you off. You wanted to say something else?
No, I just thought that was awesome. I think our customers, our viewers would appreciate understanding the details of that, because you know what, not everybody understands the word spread and what that means. So I appreciate you explaining that to them. I would also like to know a little bit more about your security model when it comes to storing people's cryptocurrencies. Without giving away too much information to breach your security, can you elaborate? How do you secure people's funds so that from internal threats and external threats?
Right. So security, especially in the crypto space, has been a concern. That's why we choose coin payments as our solution for segregated wallet solutions. They are backed by custodians, but also they are backed by the numerous customers, very well-known customers such as Shopify and so on. And we obviously do internal audit on our customer funds, and which we are using for the payouts, withdrawals, and so on. And it's, even though we say secure, but also for our first-time users, they obviously come in and tend to deposit the minimum amount as a collateral balance, which is $100. And then they make the trades and they withdraw, and they see our withdrawal is instant, it's keyless. So they actually come back with a bigger amounts and deposit more in trade. So I think that's the trend, and that's understandable as well. And that's a very good question, and I'll answer that.
Yeah, I think you did. I think you did. Thanks for that. Thanks for clarifying that. And I wanted to ask something else. In the beginning, I mentioned that from our own experience, it really looked like a very easy to use app, very handy, so it's serving the mainstream. But actually, we have a lot of different people watching. It's not like the mainstream is only the mainstream. You have different trading groups of people, types of people. You have like, momentum traders, swing traders, like investors, long-term traders, very, very much different people. How are you actually planning to serve all those different kind of peoples? Are you only focusing on a very specific niche, or are you able to serve the needs of the different people watching that video?
Right. So for any traders, regardless whether you're swing traders, momentum traders, or technical traders, what you really need to see is how much you're paying for those trades, what your entry prices are, what your exit prices are, whether your prices are real. And that's why Quantfury, is the best solution for all the traders. Again, as DaVinci mentioned in the beginning, and Chris, you as well, is that yes, a trading view, for example, charting solution is good for them to use where the entry and exits are, and they can come in to Quantfury and trade on those prices because our prices are real from those exchanges. Mm-hmm. And having said that, the cost of those trades are also, there's non-existent. So we are making the odds for the traders to be either success or failure, but the odds for the traders are not better. Of course, we're not here to advise which trading to do or which direction the trading should be made, but at least we're giving the best intermediate solution for our users, or across all genders or types or nationalities.
Okay. So, Da Vinci, is there anything else you would like to mention? Because basically the most important question of us are already answered.
Yeah, actually, I was thinking about how the traditional markets, when it comes to leverage trades, what she could end up doing if the market goes against you rapidly in your trade, you end up owing the broker more money than you actually deposited in your account. So, for example, you went short with now the stop loss, or even with a stop loss, and it jumped your stop, and all of a sudden the market has like either taken off in one direction or the other. It doesn't matter, and you are liquidated completely, but they weren't able to. The broker was not able to liquidate at the price that you're supposed to be stopped out at, and so in order for the broker to not lose money, you have to pay all that money back that when they finally able to sell. So for example, let's just say Bitcoin, I go short on Bitcoin at 5,200, it jumps all the way to 7,000, 10,000, and you're not able to sell at the liquidation price of 5,500. Do I have to pay the difference there? Right? Because
So
you have to buy it back the short at 10,000.
No, to the contrary, I mean, the most you can lose is what you made the collateral with. So say you deposited $500 worth of Bitcoin, and that's the most you can lose. But having said that, we don't have such thing as a liquidation price. But if your collateral balance or your account balance goes to zero, your positions will be be closed and have a margin call. Again, there's no because of the transparency, because our prices are real from those exchanges, you can actually say go to Bitfinex and see the order book execution where the candlestick popped up or popped down, and say, okay, that was my execution. In the stocks as well, we take from where the market actually traded and trigger your stops and trigger your take profit and so on. And obviously, those are exchange prices and it's transparent. And again, I cannot stress more enough that transparency is the key. And our users. And back to your question, the most you can lose is what you actually deposited with, and you're not going to owe us any money as well.
I want to catch that. Also, yeah, I want to catch that point up. What you said, all you can lose is what you deposit, and this I want to derive the most important point from here. So you will find the iOS and the Android link for the application in the description. You can try it out. But what he said is very important, and also we want to add something on that. Only speculate with what you are willing to lose completely. So if you are doing that, the worst case is that you lose what you are actually willing to lose. And the upside obviously is also very high, but only put in if you are trying it out. If not, it's fine. If you are trying it out, only invest or speculate with what you are willing to lose completely. So the links will be given down in the description down below. And now we want to end that episode. It was actually really interesting to dive really deep into that trading leverage space. Are there any last words, Da Vinci, you or maybe Gregory, you want to mention in the end before we wrap up today's episode? Anyone?
I have no last words, but yes, the most important thing about trading is to not get wrecked, right? So, and to do that, you have to manage risks, and meaning don't go all in. If you do deposit if you deposit $10,000 and that's all you've got, whatever trade you make sure it's a very small, tiny trade that you're not going to lose the whole $10,000 on, please.
Exactly.
One thing I want to add is that, I mean, this is kind of a secret, but say you deposited with one Bitcoin to trade, you can actually hedge that by selling one Bitcoin worth of, in your Quantfury app. And no matter what the Bitcoin prices goes up and down, you always look in the value and trade with caution, obviously. That's all I can say.
Trade with big caution. That's the perfect word to end the perfect sentence to end that episode. So thank you to everyone for DaVinci taking your time, for Gregory taking your time, and for all the viewers taking your time. Make sure you smash up the like button. Leave your thoughts in the comment section down below. And thanks for taking your time. We will see each other at the next episode of MMCrypto, as always, very, very soon. So the last words for today, as always, guys, thank you for watching and bye-bye.